Millennium celebration or anything like that. There's the bell. We begin trading. It is Wednesday. Futures have been to the plus side all morning long. What's that, Rick?
This would have been a good day to have Joe ring the bell. They didn't have anybody there to ring it. Joe's been saying how he really wants to, and
I know. But, you know, we also really want Robert De Niro to put us in one of his movies. We haven't gotten that either.
And William Shatner never showed up.
And Shatner never showed up, and I never got a Mercedes. So, you know, there's some things we just don't get, despite our fame and popularity. Anyway, the market is headed, should be headed higher this morning based on what the futures were doing. But Rick Schottenfeld is a very nervous man about this market. In fact,
well, look at what happened
2 hours ago, 2.5 hours ago, you used the word bubble.
Well, look at what happened today. I recommended 3 stocks on the show. The safest investment of the 3 I recommended was is PetSmart. That's a company at 10 times earnings, you know, that I think could, you know, potential target could be $18 a share. And then the most speculative stock I recommended on the show was MRV Communications, which is the optical networking, CMGI kind of clone in the networking space. Mm-hmm. And the stock of the 3 that people are flocking to is MRV. People aren't flocking to, you know, fundamental soundness. They're flocking towards
a story, a high-tech story.
High-tech speculative. And look, I like MRV. I think it's a good relative value. But if I had to put them in an array and say which is the safest investment, nobody wants that. They don't want the safe investment. The public is running into the speculative stock. And I think that's a very good illustration of what's going on in the marketplace.
Which will end, sadly, you think.
Yeah, but who knows when? I mean, I don't want to sit here and be doom and gloom because, you know, this could go on for another year. Who knows when it's going to end? But what it's doing is taking money and sucking it into the most speculative parts of the market.
Can interest rates end it?
Interest rates
haven't so far.
I don't see it ending it right at this point. I don't think another half a point. I think rates are low enough for people to conduct their business. I think that the equity markets are available for raising lots of capital for these internet companies. Companies without earnings are able to take this equity and pour it into trying to grow their businesses. I think if something happened to close the new issue window and to end the availability of equity capital, which we've seen happen before, that would be very problematic for this market.
That would be a liquidity issue.
Right. There wouldn't be the capital available to fund these businesses. They would have to go to the debt market where they would find maybe they don't have the cash flow to sustain debt to the extent that they want to, and that could be something that might do this.
All right, well, we are to the plus side as the futures indicated we would be. Let's go back down to the big board now and get some details from Maria Bartiromo. Maria?
Thank you very much, Mark. Once again, we are looking at the technology sector and the online brokerage community really doing the best, and that's where you're seeing the breakout today. Yet again, the money is flowing into this market, and we're seeing it move stock prices higher. Dow Jones Industrial Average right out of the gate up about 25 points. Nasdaq Composite also doing very well, up about 15 points as we speak. We told you earlier about the Qualcomm situation that Payne Weber initiated coverage of the stock with a target price of $1,000 a share. Investors are reacting in the early going. Qualcomm stock opened up more than 60. It is currently up $60 to $564. $564 on Qualcomm after Payne Weber said that the stock goes to 1,000. The stock is well above 500 as we speak. It actually closed yesterday at 503, now at 564. Internet stocks pretty much higher across the board. Yahoo right now is higher by $6. DoubleClick doing very well, up more than 18. I told you earlier in the show that DLJ took its target price on DoubleClick up to $300 a share. The stock right now is up at 18 and 9/16. This chart says 17, but it's moving so quickly. I assure you, it's up more than 18 right now. A gain of more than 7%. As you can see, DoubleClick has had a phenomenal move, similar to many of the other internet companies that you're aware of. America Online opened a bit lower earlier. It is now in positive territory as well, up by 2/16 on AOL right now. Lycos, Amazon.com also doing well. eBay opening up 1 1/8, as well as Yahoo, as I mentioned, up more than 6. Amazon right now up 1 and 9/16. Financial area, the other support today for the stock market. You've got the online brokerages looking good. Schwab made some bullish comments earlier. That stock was higher in the pre-market, although it did come off of its best levels of the session. E-Group opened higher on the Nasdaq. That stock right now is up 1 3/4. You're also seeing some strength in Ameritrade on the online sector following Schwab higher. Overall, though, brokerage looking pretty good as well. The traditional brokerages, American Express is not yet open, but looking higher today by about $2. You've got Morgan Stanley Dean Witter up a fraction. Merrill Lynch also looking a bit better on the session. Oil stocks also opening higher, even if just fractional moves. I mentioned earlier that as the money continues to flow into U.S. equity funds, some investors are looking outside the U.S. for some opportunities. And one of the reasons is that the international funds have done actually better than U.S. funds over the past 2 weeks or so. I put this up in graphic form to point it out to you because trimtabs.com told me this just a few minutes ago. I was on the phone with Charles Biederman, and he tells me that over the past 5 days, the U.S. fund has lagged the average international fund, and that's one of the reasons why investors are following performance. Take a look at the stats, folks. Past 5 days, the average U.S. fund is up 3.6%. Do that on an annualized basis, you've got an annualized percentage gain of 187% for the average U.S. mutual fund. Compare that to the average global fund. Over the past 5 days, it's up 5.25%, but the annualized gain there is up 270%. No wonder you're seeing 35% of the money, which is coming into all funds, 35% of that is going to international funds. Where are they going? They're going to Asia, they're going to Latin America, and they're going to Europe. People are looking for alternatives to the U.S. market. While they're continuing putting it in the big leaders like the Qualcomms and the Internets of the world, they're also looking for opportunities on international markets at a time when a lot of the strategists do believe that the economic environments around the world have bottomed and are certainly on an uptick. That's about it for now. We've got the Dow Industrials up about 50, Nasdaq doing well, also up 35. Mark, back to you.
Thank you, Maria. In fact, the Nasdaq is once again over that magic 4,000 mark. Haven't managed to stay there at the close yet. Here's Tom Costello. Tom?
Well, we made 3 runs at it and haven't closed above it. We're at 4,007 right now. The new intraday high to beat is 4,022. We hit that yesterday. Among the movers today on the Nasdaq, Qualcomm, you've been hearing about this, up another 12%, $81 to $585 right now. It's jumping as we speak, but that on the news that we have a new target of $1,000 coming from Payne Weber, and a 4-for-1 stock split, you know, is coming up soon. So watch that one. I mentioned egghead.com as a stock to watch. It is indeed the #1 volume mover, up $6 to 18 and change on eggs, EGGS. That following news that Media Metrics puts egghead.com among its top 10 e-commerce sites. It's helping the stock today. Commerce One down 4%, $9 now, giving back some of the gains we saw yesterday. The stock ran up $75, then pulled back to the flat line, then lost a few dollars when we heard that the lockup period was ending yesterday, even though the company is saying specifically that nobody can, or the personnel are prohibited from selling their shares until 3 days after January 28th. Nonetheless, we're seeing the stock give back some ground today. Elcon in that same sector, B2B, up 35%, 13 and change to 49 and change. This was one of those hot B2B stocks yesterday. Today, giving up some ground, adding even more ground, even though we've got, or partially on news, I should say, that the company planning to spin off Elcom.com, which is its e-procurement subsidiary. Watch that one. Double click. You've heard Maria talk about it. Up 8% right now, $18 to $239. We have a new target on double click. The new target goes to $300 from $190 from DLJ. Pardon my back. Ameritrade up 10%, 2.25 right now to 22 3/4. On those comments we have from Charles Schwab, E-Trade right now is up 1 3/4. Knight Trimark trading up 1 9/16. We have Hamilton Quist upgrading from a market perform to a buy. Also, I got to tell you about Kushner Lock. KLOC is the symbol on this one, up 82% right now, 3 1/3. It earned 36 cents a share for the year ended September 30th. And so with that, the stock is moving higher, and Egghead right now is up 50%, 50%. The Nasdaq is above 4,000. Mark, back to you.
Okay, thank you very much, Tom Costello. Rick Santelli at the Chicago Board of Trade. Rickster, how things going there?
Well, after the equity markets, let's go back to the evil twin. Here we are in bonds. Half empty perspective remains. We can't even get up in this market towards a weekly high challenge. The current high for the week's 91.12. The low's 90.22. Really narrow range. We traded up to 91.09. Lackluster trade. Traders really talking about, is there going to be a big surge, whether it's going to be in corporates with higher yields or treasuries when we come back for next year. But at the moment, Mark, hovering at 6.46 yield, and as we pointed out many times, traders think unless you can breach a trade above 6.5, don't look for a lot of action in the interest rate futures for the next couple of days. Mark?
All right, thank you very much, Rick Santelli. Let's go over to David Faber now in the Air Force One and see what's going on. David?
Ooh, Nick just told me fast, please. But he
fast?
Says, yeah, fast. Well, we got somebody.
Thank you, David Faber. Now
you're welcome. Yeah. But at least he says please. Now, I want to start off with Coca-Cola. Lehman Brothers raising their estimates for 1999 from 23 to 26 cents a share for the Coca-Cola Company of America, and their 2000 earnings per share estimate goes from 42 cents to 45 cents a share. So they go up 3 cents there. Solid volume prospects are seen, and they see EBITDA, 99 EBITDA of $2.29 billion, better than a 10% annual advance. In the year 2000, they're looking for a 12% increase. However, they don't upgrade the stock or anything like that, but they do see more earnings for Coca-Cola. Finally, wanted to just get back to Commerce One, which we've been talking about. It was yesterday at about 5:04 that we told you about the lockup. The company's Tom Costello, I guess, just said, saying that insiders or company officials would still not be prevented from selling for some time. Nonetheless, it is about 37 million shares in toto that is available for sale. And that will not be all, I don't believe, company officials, so some could be sold immediately. And as you saw, the stock down. I got it down right now, $10, which ain't much. That's about it. My partner is not even here right now.
Okay, probably
left
went
the
out.
building.
Probably went out to burp. Thank you, David. The Dow right now to the plus side. Nasdaq also. Bond actually improving a tad, right? 646. I think I saw before they changed it. That's a little bit better. We'll take a quick break, then we'll get some year 2000 predictions from Liz Ann Saunders, Managing Director.
Coming up on today's edition of Taking Stock, Paul Rabbit of Rabbit Analytics joins us live from Los Angeles this morning. He'll offer his picks. Give us a call, 1-800-800-CNBC.
What's in store for the financial world on the first business day of the new millennium? Sunday, January 2nd, CNBC follows the opening bells around the world because it affects your money here. The opening bell around the world, only on CNBC. Sponsored.
Some of today's top stories. AT&T asks a federal appeals court to overturn an FCC decision allowing Bell Atlantic to provide long-distance service in New York. Forecasting a fourth quarter revenue shortfall, Value America says it's in a restructuring mode. The online discount retailer says it will cut 47% of its workforce. That's around 100 jobs. And Ford says it's built a test car that has the space of its Taurus sedan and gets 70 miles per gallon. As Bob said earlier, where was that in the 1970s?
Yeah, right.
Could have used it then. Time now for a news update. Here's Alina Cho.
Liz, Bob, thank you very much. I thought this might happen. Good morning, everybody. As the countdown to Y2K continues, a private party at Seattle's Space Needle has now been canceled. It comes one day after the mayor canceled the city's official New Year's bash due to security concerns. Meantime, NBC News has learned law enforcement officials around the world are rounding up a number of people suspected to be in various stages of planning terrorist attacks against civilians, including Americans in Europe and the Middle East, some with ties to Osama bin Laden. Officials in California could increase security this holiday weekend. About 200 pounds of dynamite and other explosives are apparently missing. Authorities say they were stolen from a police bomb squad bunker near Fresno. Overseas, a possible breakthrough in the hijacking of an Indian Airlines plane in Afghanistan. It's in its 6th day now. The hijackers have reportedly dropped their demand for $200 million in ransom money. 160 people have been held since Friday. Today, the head of a multi-million-dollar chemical company is facing charges of abandoning his 10-year-old son. Police say 62-year-old Richard Kelso and his wife left their son in a wheelchair at a Delaware hospital. With him, a note that said they could no longer care for him. They are out on bail. And Tipper Gore will be released from a Baltimore hospital today. The vice president's wife underwent surgery yesterday to have a small growth removed from her thyroid. Doctors are testing for cancer now, but say her condition is not serious. Reassuring. 17 minutes after the hour, that's a look at the news. Bob and Liz, back to you.
Thank you so much.
And let's get over to Joe Whitty, starting on the West Coast here, which a beautiful 7:17 in the morning there.
That's right. Time to get up, head off to work, or head up to the Cascades, do a little bit of skiing, everybody. We've got mostly fair skies until we get to Seattle and Idaho. Low clouds and fog, a little dense at times, everybody. These clouds over Southern California, where it's been so dry, not going to provide any moisture for Southern California. Frontal system still extends way up to the north. Right now it's cold in Seattle, 38 degrees. It's 35 degrees in Las Vegas and Denver on the way to 60s. Yes, 36 degrees at the present time. Los Angeles now 50, going up to high sunny with 74 degrees. We see 37 degrees at Seattle, going up to a little bit of sunshine in the afternoon. That should help push them up to 46 degrees. And Las Vegas, 65 later today. Look at this bubble of warm 60s through Denver, 50s up through Montana into southern Canada. It's cool air and a little bit of lake effect snow here along the eastern seaboard. And we're going to find mostly sunny skies down Atlanta with a high today of 66 degrees. Southern Florida looking pretty good for the end of the year. 72 degrees later on this afternoon. So Bob and Liz, that wraps up the weather across the country on this Wednesday morning.
All right, Joe. Thank you very much.
Thank you so much, Joe. Our next guest says he is positive for the long term, but he thinks we will see somewhat of a pullback in techs and telecommunication stocks. Joining us now with his market outlook is Jeffrey Davis, Chief Investment Strategist with State Street Global Advisors, live from Boston. Good morning, Jeffrey.
Good morning. How are you?
I'm well, thank you. I guess the valuations, is this what you feel, are so incredibly high that at some point they hit the ceiling and come back down?
We've been big buyers of telecoms and telecommunications over the last few years, and there sort of comes a point in time where you look at the valuations, and even though you love the company story, the strategy, the management, you go, well, how much can you stand? It's like a game of chicken. And I'm not saying Qualcomm is one of those stories, but you look at 170 multiple on next year's earnings, and you ask, what's the foundation for that? How optimistic do you have to be?
But there have got to be some tech stocks that you still like.
Oh, sure. I mean, they're great. There are great companies out there. I mean, Cisco is always a great company. But I'm not saying that certainly can have its pullback if interest rates really spike up. There could be some disappointing expectations for growth. I love EMC and Oracle, but again, I'm ready for a rough ride, and I'd rather sort of focus on other companies that have better valuations for the next year.
Well, then, would you reallocate, and if so, into what sectors?
Well, let's talk about some, the uglies. I mean, there's certain individual issues. Energy is still an interesting play. I think it has a lot of steam left in it. When you have simultaneous growth around the world, you have a lot of draw on the natural resources, and oil and energy is an interesting place to be. So that's not a bad place to diversify a tech-heavy or a telecom-heavy portfolio.
Give me a name.
Baker Hughes is an interesting name for a couple of reasons. It's an oil service company that tends to, its profitability lags an increase in oil prices, and you've seen the increase this year. Its profitability should flow through next year. They've had some problems, internal accounting issues that we think are going to pass. We think they've been very upfront and honest about the issues. That's depressed the price a bit, raised some questions. But so it's got a couple things going for it in the value category, but again, a good growth story because we think oil prices are going to be strong into the new year.
I'm sensing that you are positive long term, but would you describe yourself as a short-term bear?
Well, let's say I'm short-term bear on some of the speculative aspects of this market, and I love technology. I love it at home. I love the internet, but I look at these the business models, and I'm asking myself, why would I want to pay these prices? These are good maybe 30-year companies,
sure,
but not good 2-year companies.
Have you pulled some cash onto the table here?
Well, we haven't pulled cash. We've been redeploying it into kind of more boring names. Frankly, they're not exciting to talk about, but they're, like the food companies. Best Foods has been going nowhere. The whole sector's been boring, but that's good, stable value and great execution in a couple of its best names. So that's better than cash long term.
Jeff, good to see you.
Thank you.
Happy holidays. Jeffrey Davis, Chief Investment Strategist with State Street Global Advisors.
Well, he just alluded to this, so we're going to talk about this up next. Shares of Qualcomm are soaring today after Paine-Webber initiated coverage and set a very bullish target price.
We are going to speak live with the analyst who made that particularly dramatic call straight ahead on Market Watch. Stay with us.
Do you know who I am? This is CNBC's Market Watch. Seen live in North America, Latin America, Europe, South Africa, the Middle East, and the Caribbean.
Qualcomm skyrocketing again today, boosted by Paine-Webber's initiation of the stock with a buy rating and setting a 12-month price target of $1,000. Right now, shares of the digital wireless communications company, which are way up over 2,100% so far this year. Let's take a look at how it is trading. We have this up on our screen.
It's coming. There it is.
Let's hope.
Up 71.
All right, we do have it. Up 71 on the day. We were down at 20 earlier. We were having trouble drawing this, obviously, but around 20. This was back in January. It's been one of the high flyers on the Nasdaq, and obviously that's not correct, but we have seen a good performance in it. We'll put it that way. And we want to talk about what has affected that stock partially over the past several months. Obviously, being involved with the wireless industry, that is a hot element of it, and right now this is driving the stock, at least for the day, and a lot of people asking, how do you pick that number? Why $1,000? We want to talk to the managing director in telecom equipment and wireless analyst at Paine-Webber, and he joins us right now, Walter Piecyk. Walter, you got to bring us up to date here. Why $1,000? What are you getting that out of?
The principal reason for the $1,000 price target is really the patents that Qualcomm has on CDMA technology. This is a digital wireless technology that's going to enable you to use a cell phone, or whatever form a cell phone takes at that point, to offer data speeds like you see on cable modems today. Those patents will generate, in our opinion, a significant royalty stream for Qualcomm over the next decade, perhaps reaching as high as $20 billion in the year 2010.
Okay, I understand that, but we're talking about $1,000.
Yesterday on Parametric in the Journal, which was fairly bullish too, but PMTC very active today. Parametric up 3 3/4 on the rebound trail from down in the teens.
And thanks, Joe, very much. Well, investors are reacting to the first big shakeup in the online retail sector following the holiday shopping season. Value America, which sells computers and office supplies, is announcing a restructuring. Here's how investors are reacting to the news. They were reacting negatively the last time I looked. Right now, there's the stock. It is still down a little bit. It's off 11/16. That's a lot for this stock. It's 6 1/8. Joining us now with a closer look at Value America is the Wall Street Journal's Steve Frank. Steve.
Thanks very much, Consuelo. Well, Value America says it will cut nearly half its workforce and also miss the street's expectations for fourth quarter.
Credit markets, I would think caution is the watchword as we dwindle down to a precious 2 days left this year.
Think about it, yeah. And just getting that champagne on ice already. More than one. Well, here we are, as Ted points out, in the final countdown to Y2K. And just like the family who canceled their private party in Seattle's Space Needle, folks in Bondland aren't taking any chances either. They've closed their books and they're on the sidelines waiting to see what, if anything, happens as the year 2000 dawns. So things are very, very quiet. The 30-year cash bond is a little firmer today, but an extremely thin volume. The yield hovering just under 6.5%. The big question, will the sell-off we've seen lately resume in the new year? Look at the yield on the bellwether bond. This is for the past 3 years. Not too hard to see the trend. Down, down, down. We see that low of 4 3/4% in the fall of '98, and then up, up, up. In fact, this has been one of the worst years in bond market history because as those yields go up, the price is falling. This morning on Squawk Box, economist Bob Barbera of Honnigan Company predicted the bond will go to 7% in the coming year. He predicts more Fed rate hikes like a lot of Wall Street type economists. Others say the economy will slow a bit in the new year. Remember, the Fed has hiked rates 3 times so far. And with inflation low, the Fed won't have to do much of anything in the new year, those folks say. Once Y2K uncertainty out of the way, we could even see a bit of a rally in bonds. Now, the economic news today is sparse, but we did get the index of leading economic indicators for the month of November. Those rose 0.3%. October revised a little bit higher to 0.1% from unchanged. In November, the biggest gainers were stocks, that's no surprise, new orders, and money supply. On the money supply front for December, economists say it's soaring as the Fed keeps pumping reserves into the banking system to make sure there's plenty of cash on hand for year's end. In fact, the Fed added reserves again today through its usual money market operations. At this point, the total of its repo operations is up nearly to $120 billion. So take all the money you want out from your local ATM. It'll be there thanks to the Fed. Let's take a look at the boards and see how things are faring in this very quiet market. Fed funds trading at 5 5/16%. That's a bit below the Fed's 5.5% target. 3-month bill and 6-month bill doing better, as you can see, down 0.06 on the 3-month, down 0.03 on the 6-month. The year bill is unchanged. Taking a look at the notes, we see the 2-year is unchanged, the 5-year is up at 30 seconds, the 10-year is up 30 seconds. Let's go to the 30-year bond, and it is a little bit firmer, not too bad, up 6/30 seconds, but at 95 and 19/30 seconds, the yield is 6.45%. We're in a very tight range, Ted. 6.45 to 6.50 is what you could call it the past week or so, and probably not too much chance of breaking out until we get past Y2K.
Sort of like my weight reduction plan this week. Very tight range without any chance of breaking out.
This time of year, you're very lucky.
The year 2000 is still half a week away, but the Y2K bug has already bitten into a Florida utility company. Some of its customers got an unusual letter.
And the CEO of a multi-million-dollar chemical company has been arrested for allegedly abandoning his disabled son. Those details are up next. But first, we're going to take a look at some of the indicators that can give you a feel for where the market is headed right now. And right now, it is heading higher.
Stocks to Watch is brought to you by E-Trade, the #1 place to invest online.
Let's take a quick look and see where we're trading right now. As you can see, the Dow is up 48 points in record territory. Once again, the Nasdaq is also up 44 points. That would be in record territory if it closed.
When the Nasdaq breaks 4,000, CNBC is your #1 place to be for the moments that make history. For all the milestones on Wall Street that move business and make you money, stay with the world leader in business news, CNBC. Profit from it.
A new intraday high today of 40.25. We have since backed off that, and at the moment we're holding at 40.19 or so in volume. 435 million shares. You know, about 3 months ago or so, we would say this is average volume for this time of day. But of course, we have seen a tremendous increase in the volume on the Nasdaq since mid-October. And at this point, that would be considered a light volume day and par for the course given what's going on right now. I want to mention a couple of stocks that are not doing well. Caojing Universal down 45%, $23 to 27.75. If we've got it, I want to take a look at a one-week hot chart on this. The symbol is XING. This stock was on fire yesterday because there was a lot of talk out there that they were going to be in talks with the Chinese government about adding CDMA technology, mobile phone technology, in this particular province in China. Because this Chinese province, Caojing or Guangdong, I'm sorry, I don't speak Chinese, but this province uses GSM technology. And anyway, the news out today is that they are a long way from getting permission to make CDMA mobile phones in China, according to industry regulators. And they surged yesterday, $42 the stock surged up. Do we have that, Ed, XING, to show the performance of that stock? And if not, we'll move on. But anyway, the bottom line is we're seeing a retractment today, or a bit of a pullback today because of this news coming out. I guess we don't have it. Let me show you other movers. A lot of Chinese stocks not holding up very well. I mentioned this one. Let me mention China Resources down 33%. China Prosperity down 26%. Okay, there's our hot chart. And as you can see, it surged yesterday on Caojing, up $42 to $51 in New York trading on Tuesday. That after the government of China's province said that they were talking to the company about manufacturing CDMA phones, and now we're hearing that it may be a long way from that. But that's a quick look at the Nasdaq. We are at 40 right now, 40.20, above 4,000. We'll see if we can do it. The fourth attempt. Back to you, Ted.
All right, Tom Costello, Nasdaq Amex market site, currently in record territory and above 4,000 to the tune of 20.25 points. More briefs for us to file. David Faber files a few right now on a company that's a household name.
That's right. It is, in fact, Ted. A company I reported on December 16th when I told you that Fruit of the Loom was very close to filing. That Fruit of the Loom will be announcing its intention to file for bankruptcy. However, that is not confirmed at this point, and the company has not returned a call for comment. So while I am hearing that and hearing it very strongly, at this point, we'll have to wait and see when the news comes out, but we did want to pass that along. Fruit of the Loom, of course, had having a difficult time. As I reported on the 16th as well, they've been trying to line up what we call a debtor-in-possession financing, $600 million of financing that the company would use once it entered bankruptcy that would allow it to do things like build up inventory and then, of course, reorganize. But it would also probably mean that the equity was a zero, as is the case most often in bankruptcies, or certainly worth less than $1 a share. As you can see, it is currently halted with news pending, and that news I'm hearing from sources in the bankruptcy community is that, in fact, Fruit of the Loom will file bankruptcy. As I reported on December 16th, the expectation was they would file in early January. That appears, though, to have been moved up in terms of when they would do it, reasons being that they were not able to get the trade at this point to provide products. That's the story as I know it at this point. Send it back to you, Consuelo.
All right, David Faber, thanks very much. Well, Bob Pisani is standing by live at the New York Stock Exchange with what's going on there, with the Dow up now 59 points, once again in record territory. Bob, what are you hearing down there?
Well, what we're seeing once again is selective buying in boring old basic material stocks. I told you Alcoa is the #1 stock this year. It blows away the competition in the rest of the Dow, up 119%. Nobody even comes close to that move by Alcoa. But today, some other boring basic material stocks are hitting all-time highs. Look at Union Carbide, no longer a Dow stock, but having a terrific year this year. In fact, it's up 57% so far this year. I'm going to show you a 3-year chart, but you can see how Union Carbide, basically a chemical company, has climbed throughout the year. Again, up 57%. And you say, hey, 57%. You know what? That beats Intel. Intel was only up 42% this year. It even beats our parent, General Electric, up 53% this year. So keep an eye on those kinds of stocks there. Take a look at Phelps Dodge, PD, boring old copper manufacturer, producer, essentially. Not having a bad year at all. It's up 31% on the year to date. And in fact, right now, today,
Good day, everybody. We're back on a Wednesday edition of Street Signs. I'm Ron Insana. The markets are still stronger almost across the board. In fact, it's possible that there will be a hat trick today as far as records are concerned. The Dow, the S&P, and the Nasdaq all in record territory right now, and the Nasdaq holding above 4,000, much as it did yesterday, but looks like a slightly stronger day for the Nasdaq than yesterday at this time, where the market sold off in the final hour and missed that elusive 4,000 mark for about the 4th time in the last couple of weeks. Let's take a look at the numbers to see where we stand. The Dow right now is up about 46 points, a modest gain on light volume to 11,522, but trying to crack another century mark today, as you can see, while we have the transportation average somewhat troubled once again, trading down a little bit. The Dow transportation average, which has not been a big solid performer this year, trading off a bit, while we have the Dow movers, including American Express, Eastman Kodak, and Hewlett-Packard, providing some lift for the Dow Industrial Average, but Procter & Gamble, Johnson & Johnson, and Merck are trading lower, and that is serving as a bit of a restraint on the blue chips thus far this afternoon. Now, as for those transports, they are, as we said, down a fraction. The utilities have also weakened a bit today, trading down about a point or so, while market internals have improved noticeably, even on the light volume. Advances beating declines 19 to 11 now, with 444 issues unchanged. 92 new highs on the big board against 251 new lows. Standard & Poor's 500 up almost 8 points in record territory at 1465, trying to crack a 20% gain for the year, which would be, what, the 4th year in a row that the S&P did that. The Nasdaq up 57 points, sitting right about at the high of the day at 4,029, 60th record of the year if it closes at these levels, and the volume's fairly heavy at just about 1 billion shares. Russell also getting into the record book, so it's not a hat trick, it's, you know, four-cornered hat here today, up about 7 points to 495.28, while the 30-year Treasury bond has been somewhat helpful today, picking up 11 ticks, the yield dipping a bit to 6.44%. Let's head back to the New York Stock Exchange now to get the final word on Wall Street. Art Cashin, the Director of Floor Operations for Payne Webber rejoins us now. And, you know, Art, it's interesting, the Russell going to a new all-time high. That's the first time since the crisis of last summer and fall that the Russell's been able to eclipse its best level ever. Is that an encouraging sign in any way, shape, or form?
Well, absolutely, Ron. One of the, or several of the, encouraging signs over the past few days, particularly the pre-Christmas rally. It was broader. We've had some leadership show up, although not today, in some of the smokestack America cyclical area. So it is as if people are positioning themselves for a pretty healthy economy, certainly through the first half of next year. So yes, that's encouraging. And I don't know if, I'm sure we'll hear from everybody that the small caps are finally going to do it. maybe they are, but it's just nice to see them to get up off the canvas.
All right, now, with respect to the early part of the year, is there anything that you're worried about that might jeopardize a rather impressive showing here by at least a solid portion of the market over the last several months?
Well, I think if it turned out that there was a true Achilles heel in some of these tech stocks, as we discussed before, I mean, some of them are so amazingly overextended by most standards that you worry about that. What I'm a little bit more concerned about is that it does look to some degree like prosperity's breaking out. Europe is beginning to perk up. Japan is showing some decent signs. You might wind up with some competition for capital, and that could spell higher interest rates, despite what the Fed might or might not want to do. So
by the same token, a year ago today, we were worried about just the opposite, about the whole world falling deeper into recession and dragging the U.S. along with it.
And they kept the rates down, as you recall. Yeah. They gave up 3 cuts down 3/4 of a point, and that managed very well. I mean, Mr. Greenspan's resume continues to look impressive with this economy.
We'll leave it on that note. Have a happy New Year, Art. Good to see you.
You too, and all the viewers. Thank you.
Thanks. Art Cashin, Director of Floor Operations for Payne Weber, live from the New York Stock Exchange. All right, let's shoot over to Ted David now for a quick look at today's business headlines on a Wednesday.
Did you happen to ask the Treasury Secretary where he stood vis-a-vis the dollar?
That is a dance we do every time.
Nice try.
Yeah.
All right, now a pretty rosy look, Ron, rosy outlook anyway, coming from the nation's #1 online brokerage. Charles Schwab says it expects its fourth quarter earnings to beat Wall Street estimates. Schwab sees a 61% jump in profits for the period between $162 million and $171 million. That's 19 to 20 cents a share. The consensus estimate is at 17 cents. Schwab also sees record fourth quarter revenues exceeding $1 billion due to a rise in stock trading volume. Here's a look at how the shares of Schwab are trading right now, up 5.5 today, 16%, 39 and 13/16 on this 3-month chart. Value America announced a new restructuring plan today. The online electronics superstore said it will cut about 47% of its workforce and consolidate company facilities. Changes also taking place at the top, with 2 Value America founders resigning their executive posts. Company President Glenda Dorchak is the new CEO. Value America also saying fourth quarter revenues would fall 6 to 9% below street estimates, due in part to product fulfillment delays. Shares of Value America currently down $1, but that's a big percentage loss on a $5, $6 stock. 5 7/8 the price here. That's off 14.5%. An economic report released today indicates growth will continue well into the new year. The Conference Board's index of leading economic indicators rose 108.3 in November. I should say it rose to 108.3 in November compared to October's upwardly revised number of 108. It's the second monthly increase in a row, the highest reading in 40 years. Coming up, second hour market wrap tonight, 5 Eastern. Is there another Qualcomm out there? Scott Cohen on a company, the stock of which is rising, you might not have heard of, another company. Charles Schwab delivering a bullish outlook. We'll take a look at the online brokers in our sector strategy segment. That and more when Maria and I join you at 5 Eastern this afternoon. Of course, we'll also have a special if the Nasdaq closes above 4,000. It appears it will at this point. And if it does, we will begin that special, I guess, at 4 Eastern. Ron, back to you.
You going to survive until then?
I'm going to try.
All right. We may have to shoot you before your show. All right. Let's take a look at the Nasdaq now, which, as Ted said, is threatening to close above 4,000 as it did yesterday, although it appears to be in better shape at this hour than it was yesterday at 3:37 Eastern Time. The Nasdaq is up 57 3/4 points, or another 1.5%. Where does that put it? About an 83% gain for the year. 4,029 is the number on the Nasdaq. Let's go out to Tom Costello, who is at the... Is that the new and improved Nasdaq Amex yet, or are you still at the old Nasdaq?
We're still at the old one. They're still plugging in all the cables with the new one. So if everything goes well on Monday, we'll be at the new one. But you're right, 83% year to date. This Nasdaq now holding above 4,000, and it looks like, in fact, we're going to do that. A couple of samples of how the sectors are doing. Telecom up 2.5%. You can thank Qualcomm for that. In the biotech sector, up 3.5%. Amgen, a big reason for that. Amgen trading up more than 4%. And in the finance sector up 2%. We have U.S. bank shares up 81%. They are announcing a new internet alliance, or initiative, I should say, and with that, the sector is moving higher. But we do have Nasdaq 4,000 today. We are talking about a special after the close today, and I wanted to kind of draw your attention to some of the bigger developments on the Nasdaq this year. And clearly, you have to talk about 2 new components to the Dow Industrial Average being Nasdaq stocks for the first time in history. Those, of course, being Microsoft and Intel. That would clearly be the biggest development of the year for this index. But other developments would be as follows. To begin with, the best performing market ever. As Ron mentioned, 83% 4% year to date. If we closed at this level for the year, it will be the best performance for any stock market in the history of the United States. The Dow was up 81.7% in 1915. 30 to 40% increase in volume this year, specifically November and December over last year. The volume increase has been spectacular. Last year on the Nasdaq, we averaged about 780 million shares or so. This year, we have got substantially more than that. November and December, 1.3, 1.5 billion shares respectively is where we're trading so far. A move to expanded business hours. A lot happening this year. To begin with, in October, the Nasdaq extended the trade reporting and quotation systems to 6:30 p.m. Eastern Time. And in addition to that, on February 2nd, the Nasdaq is going to calculate a continuous inside quote, the highest bid and the lowest offer from all market participants through the end of that extended session to 6:30 p.m. And of course, we're moving towards this expanded market hours. And the talk is that could happen as soon as the summer or the fall. And finally, a move towards going public. You know, the Nasdaq right now is in the midst of this huge restructuring operation. The Board of Governors votes on that in early January, and we will actually be moving towards demutualization throughout the year with a first tranche being offered up. And we don't have a date on that yet, but this is clearly a big, big development. So a big year for the Nasdaq all the way around. It's hard not to acknowledge that when you've got this kind of an advance. I would also point out, Ron, we've made this point before, but on a day when the Nasdaq is at 4,000, it's important to point out that of the stocks that were on the Nasdaq as of December 31st last year, 50% have lost ground. 50% have lost ground, 48% have gained ground, and the rest are unchanged. So, in fact, more decliners than advancers this year, even though we have this incredible advance in the Nasdaq. And as we point out so often, the reason for that is this is a market cap-weighted index. Back to you.
All right, thank you, Tom.
Okay.
See you a little later, probably on the Nasdaq special. All right, as the new work week begins on Monday, the focus will be on the financial markets as trading gets underway around the world. Now, with that in mind, starting this Sunday evening, January 2nd, CNBC will have live coverage of the opening bells from all corners of the globe. It's the first time we've ever done this. Markets will be opening for the first time ever in the year 2000. Our special coverage gets underway at 8:15 p.m. Eastern Time right here on CNBC. Live updates literally from around the planet. The first market to open, we understand, will be in Bangladesh. That'll be the first look we get at market activity around the planet in the year 2000. Before that, though, when we return, new Papa and our stocks editor, Joe Kernan, comes back.
You're serious?
I am serious.
Bangladesh.
I'm serious also that you're new Papa.
Yes, that's true. That could set the tone for the trading in the global markets that night. There's no doubt in my mind that will. Ron, an analyst, I'm kind of excited. Earlier this month in December, this analyst said that this company, that earnings could fall below expectations after seeing some competitive pricing concerns that AT&T was talking about. And he extrapolated it. It could hurt this company, killed the stock. And now the company came out and confirmed what this guy said. We'll tell you what stock that is, what company it is, when Street Signs continue.
For Chapter 11 bankruptcy officially. David, of course, telling our viewers about that this morning. That stock trading at 1 1/4. That was one of the 1980s high flyers, acquisition target of William Farley. Coming up, U.S. markets make a last-minute run before saying goodbye to the 90s. Gail Dudak, Chief Investment Officer at Warburg Dillon. Maybe not 4, but it looks like there are 3 on tap. Joe Kernan's here. We got Tom Costello and Bob Pisani. And Joe, let me come to you first. Gail Dudak said congratulations, by the way, so
nice,
you know.
Wasn't it? Thank you. Appreciate that.
All right. Interesting rotation. Cyclicals, financials, and technology stocks doing better today.
Kind of looks like the opposite of yesterday. The Dow is sort of giving back its gains, and the Nasdaq chugging along. Rondi, you don't have that chart anymore of the
Nasdaq and the Nikkei?
The Nikkei versus the Nasdaq.
No, but we showed the Nasdaq at 4 standard deviations above its 200-day moving average. Again, casting no judgments, but it is a remarkable thing that's taken place.
I understood, but you know, yesterday I wasn't here, and the 4,000 special could have been done yesterday had that chart not gone up. But now it looks like certainly we're going to do it today. But you know, Commerce One, Qualcomm, Commerce One actually giving back some ground today after our own David Favors reporting about the lockup provision. But you know, you're seeing some pretty exciting action in a lot of these. And I've pointed out, and I think I'm going to point it out again on the Nasdaq special run, it's not just the dot-coms. The new era biotechs are running again today to new highs, and it's the same list of 4 or 5 that we'll talk about. And the word's getting out, I think, on some of these, that it's going to fundamentally change the way that all drug discovery is
genomics, you mean?
Yeah, genomics, functional genomics, combinatorial chemistry, and rational drug design. And it's it's pretty incredible stuff.
Let's go out to Tom Costello right now since we're talking about that area of the world. 60th record of the year, Tom, and looks like first close above 4,000.
I've got so much to say, but we start out with the fact that this is now up 83% year to date, the best performing stock market of any market in the history of the United States. You know, you were talking specifically, or your previous guest was talking about how do you value these companies? The debate we've been having for years now, or months, but the bottom line is if you try to apply a normal valuation to these stocks at any point during the year, and you therefore got out of stocks because you thought they were overvalued, you've been killed. This market has moved on beyond you, and there's going to be a real tug of war.
Particularly if you tried to short them.
That's absolutely right. And there's going to be a real tug of war. The point has been made to me several times. Come January 1st, for those people who want to get out of this market for tax reasons, and then you've got this cash inflow that we expect at the first of the year. We're going to talk a lot about this on the special at top of the hour.
Bob Pisani, the Dow unable to do it, and as Joe was saying, and as we said earlier, a mirror image of yesterday in many ways.
Yeah, the Dow sold about 70 points off in the last 45 minutes. What happened was they took some profits in the basic material group that had run up this morning. So DuPont, Alcoa, and International Paper all sold off late in the day. Home Depot has been especially weak in the last hour. It's down about $2.50 in the last hour and a half. GM and Disney also were on the weak side in the last hour. Ron, S&P 500's up 228 points, 230 points so far this year. Of that, 80% is due to technology, and technology is only 29% of the index by weighting, Ron.
Yeah, Tom, I want to come back to you for a second. I mean, if you think about the price-earnings ratio on the entire NASDAQ now, it was at 160 a couple of weeks ago. It has gone up since. If you look at the NASDAQ companies that make money, the PE is above 40.
Yeah.
These are big numbers, but they go with big times.
Yeah, absolutely. I mean, this is the discussion that I have and you've had with everybody over the course of the last 6 months. And how do you value a company that is not yet producing revenue, but clearly is, in the view of many, in the new economy, is on the forefront of the new age? I mean, apparently this is what we're just going to have to live with, and who knows how we're going to play out in the year 2000.
All right, let's take it to the closing bell right now. It is about to ring at the New York Stock Exchange, about 15 seconds away. The Dow back in the plus column, a possible record here today, not by much, but it is altogether possible. We will see 4 records today on the Dow, the S&P, the Russell 2000, which has not made a record in over a year, and the Nasdaq will close at its high of the day, up a whopping 65 points now at 4,037 on 1.1 billion shares. Not the heaviest volume we have seen, but certainly consistently strong in the last several days, even as things have quieted down at the New York Stock Exchange. Time for a special edition now, NASDAQ 4000 with Bill Griffith and Liz Claymore.
All right, Ron, indeed, we welcome you to a special edition of Market Wrap today. History made as the technology sector powers the NASDAQ to close above 4,000 for the first time after trading above 4,000 for the 4th day. The index finally closes there. We end the session up about 68 points at 4,040 and change.
We are going to have complete coverage of NASDAQ 4000, including the big winners and losers in the composite index.
Certainly one of the huge winners again today, shares of Qualcomm. That stock soaring after some bullish comments from Wall Street. We'll have that story and more coming up on this special edition of Market Wrap here on CNBC.
This is CNBC's special coverage of NASDAQ 4000. Here are Bill Griffith and Liz Claymon.
Good afternoon, everyone. This is a special edition of Market Wrap. NASDAQ 4000 is now official. I'm Liz Claymon, in for Sue Herrera.
And I am Bill Griffith. History made on Wall Street as the NASDAQ Composite Index already a historic gainer for the year, driven by a big gain for shares of Qualcomm. Vaults over the 4,000 level and stays there for the first time. The index right now, as things are starting to settle out, up 69 points now at 4,041.3 on just over 1.1 billion shares in the NASDAQ stock market. You look at the NASDAQ over the past year, history is made for that reason. That index up more than 80% on the year, the biggest gain for a year-over-year basis for any market in the history of the United States. We're looking at the Dow Industrials right there, a gain of 4.89 and even higher now, as you can see on our bug, now at 11,482.52. That is an all-time high for the Dow. The S&P, same kind of a story here, a gain of 5.5 points to 1463.19. So records all around. Bob Pisani standing by at the New York Stock Exchange. We'll check with him in a moment to talk about the action there. But first to Tom Costello at the NASDAQ MX market site. and that Nasdaq 4,000 number. Tom.
Hello, sir. Up 84% year to date, and as you mentioned, the best performing stock market in the history of the United States. We had to beat 81.7%. That was the Dow in 1915, and we did it solidly today. Let's look at the milestones on a win just a few months ago. Those are the Nasdaq percentage, 97, 21%. You can see how we have performed and the fact that this year is in fact a standout. Now let's take a look at the best performers of the year so far. We have Sensar Corporation, and I got to tell you folks, this full screen was made up about 30 minutes ago, so these things may have changed even again, but Sensar up more than 3,300%. Digital Lightwave, Qualcomm, the standout today, the standout of the year, Puma Technology, and Anchor Communications, all of them surging today. As for the individual movers today that really helped push us further into record territory, let me walk you through some of them. These are the top 5 movers. Egghead today up 4 and change to 16. An e-commerce stock moving higher because they had some positive news out of Media Metrics today. Elcom up, make that down 15/16s, have been higher throughout the day. Appropriate because this is a B2B commerce company, business-to-business company. Qualcomm in the telecom sector up 30%, 152 to 655. PaineWebber put a new target of this stock of $1,000. It really helped lift the entire telecom sector today, and it took off. Commerce One in the B2B section losing 15%, but that stock has been on fire, as you know, up about 2,000% or so year to date. And finally, USA Bank shares, pardon my back, gaining 68% today to 12 1/4, helping to lift the finance sector. And what would you expect is the reason behind that? A new internet initiative. The stock market is the talk of the town and the talk of the planet, to be honest with you, because you talk to traders around the world and they continue to marvel at this market. The question is, what happens next week? Because next week you have cash inflows with more 401k money, pension money flowing into this market. But those who have waited to take money out of this market may decide it's time to take money out. They have waited, remember, because of tax reasons. This market is an impressive market. That's the latest from here. I think I'm going to Liz. Liz?
Yes, you are. Thank you so much, Tom Costello. The Nasdaq, though, didn't grab all the action today. Let's check in with Bob Pisani on the floor of the New York Stock Exchange. Bob, what's the mood there?
Well, they're quite happy with the year. I would note that the floor brokers are dead down here. And by that I mean the institutional traders have shut down. The institutional accounts have shut down, and that's where the floor brokers get most of their business from. So it's been very quiet down here. You saw all that action over at the Nasdaq. I can tell you it's mostly what they call down here machine stuff. That is retail investors who are trading the stocks. Not a lot of actions from a lot of the institutions at this point. So bear that in mind. And our volume down here has been the lowest in several months, 575 million shares. We did not even make 600 million shares today. We had a little bit of a sell-off late in the day. Dow dropped about 60 points, particularly Home Depot took some profits. We also lost some money in some of the basic material stocks that had moved up throughout the day, like Alcoa and DuPont, all of them having done very well. Right now, the S&P 500 is about 29% by market weight in technology stocks. That's the highest it's been in a long, long time. But interestingly, the S&P 500 is up over 200 points right now, 228 points on the year, and 80% of that is due to technology. I'll have a lot more to say about that and what that means when I come back in the next half hour. Back to you.
All right, Bob, thank you very much. So Nasdaq 4,000 becomes the story of the day. Let's check with Michelle Caruso-Cabrera and get more of the play-by-play of yet another historic day. Michelle?
Hello, Bill. Yes, the incredible run in the Nasdaq may have some investors feeling giddy, but many market watchers are growing concerned.
I don't think a guy who drives a dynamite truck is any more worried than most of the guys down here. What I think has happened here is a lot of people did have money on the side for Y2K. The Nasdaq, the high tech started a run. You can't let something go up 1% a day without being involved. It dragged money yelling and screaming into it.
Our Cashin was talking about nosebleeds, and speaking of nosebleeds, is Qualcomm worth 175 times 2001 earnings, or $1,000 a share? An analyst at PaineWebber thinks so. $1,000 is his price target on the telecom stock. Qualcomm pioneered CDMA technology used in wireless phones. Analyst Walter Piecyk says he believes by the end of the next decade, 85% of phones sold will use CDMA chips, up from 18% today, translating into a $20 billion royalty stream for Qualcomm. Qualcomm already an unbelievable performer this year. It went even higher today. Take a look. A mere 153 points for the year. It's up more than 2,000%, as Tom Costello pointed out. Online brokers also performing markedly well today after Charles Schwab said earnings for the quarter would be between 18 and 20 cents a share versus previous expectations of 17 cents. If you've been paying attention to the markets this past month, it's no surprise because trading volume has been at record levels. But it wasn't just technology today. We saw what many people like to call rotation into basic materials companies. Alcoa hit yet another new all-time high. Take a look. Union Carbide also at a new high. The expectation is that the prices of commodities are going to rise. The world economy is getting better, which means more demand. But at the same time, supply isn't increasing all that fast. For example, take the case of aluminum.
We have a shortage of alumina, the raw material used for aluminum, and very low inventory, so there's not much room for increased supply. So at a time when demand is increasing and supply is very tight, you're going to see significant increases in the price.
And finally, in all the hoopla about the Nasdaq, don't forget the Russell 2000, an index of smaller capitalization stocks hit a new high today, up 26% for the year. Many of those stocks in that index are technology stocks. And the Dow dip into negative territory towards the very end for just a few minutes, so something must have been negative. What was it? A lot of pharmaceuticals were weak today. J&J off by 3%. This is the Amex Pharmaceutical Index. It's been a rough year overall for the group. That's it from here. Back to you, Bill.
Michelle, thank you very much. Joining us, as he will, over this next hour, our guest host for our special on Nasdaq 4000, Mike Santoli is a staff writer at Barron's. He'll be here to help put things in perspective for us. Just when we think that investors and journalists who cover the stock market have seen it all, more comes along like a day like today.
Yeah, pretty stunning. I mean, really for the last couple of weeks, it's a seller's strike, among other things, in addition to the enthusiasm about these kind of hot new economy stocks. But really, it's amazing that nobody seems motivated to take any profits, at least in the sectors that are the favorites right now.
When you look at a stock, say, for example, like Commerce One, though, that pulled back just a bit. Is that of any concern, do you think, to investors out there?
It would seem so. I mean, at this point, though, they have to pull back so far before you're really cutting into muscle, before you're getting into a point where you have losses, that it does seem like there's still a bit of buoyancy out there. Now, once next year comes around and this reluctance to sell related to not wanting to book capital gains this year lifts, that obviously could be more of a widespread profit-taking phenomenon. At least it would seem that way. I mean, anybody who looks at charts will tell you that it's due for something like that.
Yeah, I mean, how much of it is due to end of the year phenomenon? Y2K phenomenon.
Right.
I mean, how much of that is what we're seeing here?
It does seem like plenty of that, actually. Also, it's interesting. It's not merely the fact that the Nasdaq is up so much that is fueling its own growth by momentum, but it's also the fact that since it's been such a narrow market and there have been so many losing stocks that you can harvest for tax losses and things like that, you know, that's sort of feeding its own growth in the Nasdaq itself. So really, the bifurcated market is just really taken onto an extreme at this point.
We just shake our heads and on we go. That's right. We'll see you around this hour. Mike Santoli of Barron's with us to put things in perspective as we go along here.
Let's check on the Nasdaq major movers today. Of course, Qualcomm was one of the big ones that was talked about. Walter Piecyk of Paine Webber had obviously made this big move, saying that the stock would be trading at 175 times 2000 earnings. Other big movers: Intel up 7/8, Dell up a quarter, Cisco Systems up a fraction as well, Oracle up more than 3, Microsoft up 7/16. A lot of the big blue chip names there. Here we see, as it continues to settle, the Nasdaq Composite better by 68 points, deep into 4,000 territory at 4,041.03. Trading volume, as Ron Insana was mentioning, not as heavy as before the past couple of weeks, but nonetheless more than 1 billion shares being exchanged. And here is the unofficial look at the closing numbers from Wall Street. The Dow Jones Industrial struggling into positive territory, ending the day up 8 points at 11,484. The transports suffering just a bit down, 2.5. The utilities off 1.5 as well. And as we look at the advancers healthfully beating the decliners by a margin of 20-10, 463 issues unchanged on the session, which brings us to market breadth, which was probably decidedly positive.
Well, we'll take a break. When we come back, telecom stocks lead the way to Nasdaq 4000. We'll have an outlook on that sector from analyst Mike Mahoney.
And we will take a closer look at why one Wall Street analyst is so bullish on Qualcomm. He sees the stock soaring to $1,000 a share.
Then the White House announces plans to regulate internet prescription drug sales. We'll ask the CEO of one of the online drugstores what he thinks of that plan. Stay with us. More Market Wrap ahead.
The Nasdaq up more than 80% for the year, has made tentative forays above 4,000 in the past week. It got there today and stayed there, closing up more than 60.
What's in store for the financial world on the first business day of the new millennium? Sunday, January 2nd, CNBC follows the opening bells around the world because it affects your money here. The opening bell around the world, only on CNBC.